Right, so again, welcome everyone. Thank you for joining us today to talk about building credit from scratch. My name is Dawn Watson, and I will be one of your hosts today. I am a partner experience manager with GreenPath Financial Wellness. GreenPath is a national nonprofit financial wellness organization with the mission to empower people to lead financially healthy lives. I'm excited to share information with you about building credit. I am also joined by Lori Daniels. Lori, do you want to take a moment to introduce yourself?
Hi, everyone. I'm Lori Daniels. I'm the Lending Development Manager here at Genesis Credit Union, and I'm excited that you joined the webinar with us today.
Great. Thanks, Lori. So today during the workshop, we're going to talk a little bit about what credit is and why it's important, how to build credit, as well as busting some credit myths and talk about healthy credit habits to practice moving forward. So Lori, do you want to talk about what is credit?
Yes, definitely. Thanks, Don. Before going any further, let's get right into the first big question. What is credit? At its core, credit is an agreement between an individual and a creditor in which an individual receives something now with the understanding that they will pay the creditor back later. This can come in a variety of forms like a loan, a credit card, or a line of credit. A credit report shows your credit history and the activity on all open credit accounts. This shows how you have handled credit accounts in the past, as well as how you are currently handling credit. Things can typically stay on your credit report for between 2 and 10 years, if not longer, if they are open and in good standing. There are 3 credit bureaus that generate credit reports: Experian, Equifax, and TransUnion. It is possible that there may be differences between the 3 credit reports. Sometimes smaller banks, credit unions, and collection agencies only report to one bureau and not all 3, so it is important to review all 3. You can access free copies of your credit report from all 3 credit bureaus at annualcreditreport.com. It is recommended that you do so once a year to review for accuracy. Your credit report will typically include some personal information like your address and employer, as well as history and information about your credit accounts, bankruptcies, and collection accounts, as well as a list of who has accessed your credit reports, which are known as credit inquiries. Your credit report does not include your income or any assets or savings you may have. Your credit score is a 3-digit number that uses information from your credit report to help creditors predict how likely you are to pay them back as agreed if they choose to extend credit you are requesting. Basically, creditors use your credit score to measure how risky it is for them to offer you a loan or give you a credit card with a certain available limit. One thing that's important to mention: just because you have a high credit score, it does not mean you are financially healthy. It is possible to have a high credit score while carrying a lot of debt and having no savings, just like it's possible to have a low score due to not hardly having any debt, but being financially stable overall. Dawn, would you like to handle the credit score factors?
Yeah, perfect. Thank you.
Thanks.
So there are 5 factors that make up and impact your FICO credit score, the largest of which is the payment history. So making every payment on time every month is one of the best things that you can do for your overall credit score. The second largest factor impacting the score is the amount of money that you owe, which is your credit utilization. Creditors want to see loan balances decreasing, not hovering or increasing over time. This can often happen with student loan debts or finance loans. Also, they factor in the number of accounts that have balances. So credit utilization specifically looks at revolving credit accounts like credit cards, where your balances could go up and down from month to month. Credit utilization looks at how much of your credit limit you are using. The more credit limit you're using, the more risk you are to a creditor. So if you add up all of your revolving credit balances and divide them by the total of your revolving limits, that is going to be your utilization number. Ideally, you do not want to use more than 30% of your limits at any time, and ideally, pay them off every single month. So the length of credit history looks at how long your credit accounts have been open. This includes the age of your oldest account and the age of your newest account and an average of your accounts. So the longer your history, the better. Up next is your new credit, which is also known as those hard inquiries. So when you apply for credit, the creditor will typically do what is called hard inquiry, which is when they dive deeper into your credit report and credit score to assess their risk. If you start applying for multiple new forms of credit frequently, this can be a red flag to creditors because they start to wonder what's going on, that you suddenly need a new credit card one month, a new loan the next month, and now you're looking for another credit card the following month. Of course, we typically all need to apply for credit from time to time, which is completely understood. The key is being strategic when you do apply, limiting those hard inquiries to only when you need it. Hard inquiries typically remain on that credit report for 2 years. And then the last factor is your credit mix. This is something that is very limited in how it impacts the credit score, but it can really make a difference. Creditors want to see that you have a history of managing different forms of credit at the same time. So, for example, you have a credit card, a car loan, or a student loan. So this is something that will help create a well-rounded mixture of types of credit that you're managing responsibly. So all of the factors that go in to make up the credit report is, again, 35% the history, 30% amount owed, 15% the length of that history, 10% those new credit inquiries, and 10% for that credit mix. So while it is possible to have a zero credit score if you have no credit history at all, if there is anything on that report, the minimum score would typically be 300, which would be considered a poor score, and then all the way to 579. Once you hit 580 through 669, that is considered a fair score. 670 to 739 starts being considered good, with 740 to 799 being very good, and 800 plus falling under the category of excellent. The average score in the US varies a bit from year to year, but almost always falls in that good range of 670 to 739. So now that we talked about what credit is and what impacts it, why does this matter to you? Why is credit important to all of us? So credit can impact many areas of our lives, including your ability to rent or purchase a home. If you get in the home, the ability to turn those lights on. Your ability to keep or get some jobs. Some jobs do require credit checks before that job offer is extended, and some will periodically review your credit throughout your employment. So this could include jobs like your military clearances and TSA agents. Credit can also impact your ability to open a checking account and, of course, to access loans or credit cards. You may also have heard of or experienced difficulties getting your cell phone plan or having your car insurance rates impacted by those credit scores. Even if you're able to get that credit card or loan with a lower credit score, you may pay more to have access to that credit. Creditors may charge you a higher interest rate as a way to account for the higher level of risk they are taking by extending that credit to you. So again, consider if there's ways to improve that credit score before you apply for those loans if you can. So for example, this is a chart of interest rates on a 5-year car loan for $20,000. As you can see, the interest rates, monthly payments, and the total interest paid vary dramatically between the poor credit score and the very good or excellent credit score. So in fact, someone with a very good or excellent score would save more than $7,000 in total interest paid compared to what you would have paid if your score was poor. $7,000 is a lot of money. So this is a prime example of why building credit history, and specifically positive credit history, is so very important. So Lori, do you want to talk about how to build and rebuild credit?
Yes, thanks, Dawn. So how does someone establish and or build credit history? One of the first things I always want people to know is that building credit history absolutely does not mean going into a bunch of debt. It is absolutely possible to build credit history without carrying large debt balances and paying a bunch of interest. How? I'm glad you asked. As you know, you have to have experience to get a job, but at the same time, how do you get experience without being able to get a job? Credit can feel kind of the same. Creditors want to see credit history to measure the risk level of extending credit to you. But how can you get credit history without having credit extended to you? Similar to getting an entry level job to start building job experience, there are credit building products that are specifically designed to help you start building credit history with protections in place to help minimize the creditor's risk. At Genesis, we offer shared secured credit cards, which requires a cash deposit into an account. The deposit reduces our risk because if you don't pay the credit card, we have the money on deposit. We have many members with no credit or credit struggles that start with a shared secured credit card. Most are smaller limits from $200 to $500, but can be higher if you do have more funds available. You still have to pay the monthly payment. If not, if it's not paid in full, interest is charged on the balance that's carried over. We also offer a credit builder loan. Loan funds are held in an account until the loan is paid in full. You cannot access the funds, but does help with building credit and savings while you are building and increasing your credit score. It's always important to make sure you make your payments on time, or you will see negative credit reporting to the credit bureaus. We also offer the ability to get loans with a qualified cosigner. You have to have the ability to repay the loan payment, but the cosigner sometimes can be used to help your lack of credit in your credit bureaus. This does help with establishing and building your credit score. If you are in the situation where you've had credit history in the past and then life has happened, your credit has suffered, and you are now looking to rebuild positive credit, know that it is absolutely possible to do so. It will require some patience, but many of the same strategies that I just talked about to build credit from scratch can apply to rebuilding credit after something like a bankruptcy, foreclosure, a repossession, or even if you haven't used credit in 5 to 10 years or longer. If you are looking to rebuild credit and you have outstanding balances owed, prioritize paying those off. If you have collections or charge-offs, which is when an account falls far enough past due that the creditor begins attempting to collect the full balance owed versus just the amount past due, they are essentially collection accounts. Work on a plan to get those paid off. The same credit building products that I just talked about, secured credit cards, credit building loans, are good options to start rebuilding your credit as well. Dawn, would you like to talk about some credit myths?
Sure, thanks, Lori. So part of the reason that building credit can feel so overwhelming is that there are a lot of conflicting information out there, and some of the information out there is just flat out not true. Let's take a look at a few of the most popular credit myths and why they are not necessarily true. So first, one of the most common credit myths is that you have to carry a credit card balance from month to month in order to build credit. Not only is that not true, but it is a myth that can actually cost you money. When you get your credit card statement every month, there is a statement balance and a minimum payment due. To avoid a late payment, you need to pay at least the minimum payment due by the due date. However, if you only pay the minimum payment and there is a difference between that number and the statement balance, when your next statement cycles, you will typically owe interest on the statement balance you did not pay. So for example, if your statement balance was 50 and your minimum payment due was 20, you pay the 20, you've made your payment obligation, you're not going to get a late fee, you're not going to get reported. But when your next statement cycles, you'll be charged interest on that $30 difference. So if you paid the full $50 statement balance, there wouldn't be interest charged. Some people believe they must only pay the minimum payments and make sure they're carrying a balance into the next month to build credit. And that, again, is simply not true. We encourage you to get into the habit of paying off the entire statement balance you owe in full when you get your statement each month. This saves you money on interest charges and will help you keep your balances lower, which improves your credit utilization. So remember, credit cards are not extra money. Another myth is that all credit scores are the same. There are actually two scoring models, FICO and Vantage. Each model determines credit scores differently, and the scores are not the same. Scores can vary dramatically, so keep that in mind. 90% of conventional mortgage lenders use FICO scores when determining credit worthiness and extending credit. So I'm sure you've all heard of Credit Karma, Credit Sesame, Credit Wise. They all use the Vantage score. So the majority of time, if you're receiving a free credit score, it is likely Vantage, unless your financial institution or credit card company provides it to you. You will be able to know what score you're seeing because it will list either Vantage or FICO with the score. So Credit Karma might say that you have a 710 credit score, but when you go to apply for an auto loan at your financial institution, they might say that your score was 660. So if you want an accurate FICO score, most of the time you must pay for it, and you can go to the credit bureaus directly or go to myfico.com to obtain it. While technically having more available credit limits can help improve your utilization, this is a dangerous game to play. When you open a new credit card, you have a new hard inquiry and you have a younger account on your length of credit history, both of which can negatively impact your credit score. Also, the more credit cards you have, the trickier it can be to keep track of your due dates and make your payments all on time. So again, there is that potential that you could get in over your head with the balances that you're spreading across multiple cards. While there is no exact magic number of cards that's best to have, we typically would recommend 2 to 3 so that you can keep control of those. Some people think that paying off a credit card, they should close it. This can negatively impact your credit score. You will lose the length of history from that card and it can impact your utilization. So once you open a credit card, it is best to keep it open as long as you're managing that card responsibly. And finally, we talked earlier about reviewing your credit report and the differences in credit score monitoring tools. We also talked about how applying for credit leads to a hard inquiry, which can start to negatively impact your credit score. So some people believe that checking your own credit will also hurt your credit score. There are actually two types of credit inquiries. The hard inquiry, which is when a creditor or lender typically will do to dive deep into that credit history and measure their risk level. And then the hard inquiry indicates that you have applied for credit, and as we discussed earlier, can start negatively impacting your credit score if done too often. When you check your own credit for educational or monitoring purposes, This is called a soft inquiry, and it does not impact your credit score. It is really important to review those credit reports and keep an eye on that credit score so that you can react quickly if you notice fraud or if something just doesn't seem quite right. The good news is that you are absolutely free to do this without concern, without impacting your credit score. So, Laura, do you want to talk about healthy credit habits?
Yes, thanks, Don. It's imperative that once you get access to credit, you practice healthy credit habits to ensure you are building positive credit history. Before we wrap up today, here are some important tips on healthy credit habits to practice, whether you are starting from scratch or working to rebuild a positive credit. As we discussed earlier, payment history is the largest factor that impacts your credit score. Missing or being late on just one payment can have a quick negative impact on your credit score, and it will take a while to build back from that drop. That is why it is important to make every payment on time every month. If you are concerned about keeping track of due dates, I absolutely recommend setting up automatic payments so you make sure your bills are paid on time and every month. As mentioned, credit utilization, or where your credit card balance is compared to your maximum limit, is the second largest factor that impacts your credit score. Always strive to keep your balance below 30% of the card's maximum limit, or if you can, keep it below 10%. Ideally, pay the credit card off in full every month. Pick one specific small budgeted expense to use on your card every month, something like gas for your car or a subscription service to Netflix. Use the card for just that purpose, keeping the balance low, and then pay the full balance off when you get your statement for the month. This is a great way to build positive payment history while keeping a low balance, avoiding interest if you pay it off in full when the balance of your statement comes. Of course, most of us are going to need to apply for credit from time to time, which is understood. Be careful and don't get in the habit of applying for a credit card just to take advantage of a discount on a purchase or a free item that's being offered. As previously mentioned, this will impact your credit score and may not be worth the discount. If you do want to shop around for a best rate on something like a large purchase of a mortgage or a car, get your ducks in a row, apply with multiple lenders in a short period of time so it can count as one hard inquiry instead of multiple. This allows you the opportunity to shop around for the best deal without having more impact on your credit score. Collections can stay on your credit report for up to 7 years and can have a quick negative impact on your credit score. Collection accounts can include everything from car insurance, cell phone bills, cable equipment that wasn't returned, medical bills, rental leases that got broken early, and these weigh heavily on one's credit. Don't ignore the notice you receive in the mail. Follow up with the creditor to determine if you're responsible for the debt. If you are, request a payment plan if you can't pay it in full. If you are not responsible, file a dispute in writing with that creditor. Taking care of this as soon as possible when you get a past due bill or a notice is so important. Ignoring it because you don't think it's legitimate typically won't magically make it go away, but can make it much harder to take care of later. Finally, your credit report should be reviewed annually at annualcreditreport.com to ensure everything looks correct and that you are aware of everything that's on your credit report. Remember, this does not impact your credit score.
So great. Thank you so much, Lori. We invite everyone to take advantage of a free counseling session with Green Path Financial Wellness to discuss your unique financial situation and goals, which could include reviewing or building a spending plan, discussing housing and student loan options, exploring options to manage debt, and of course, reviewing your credit report and talking about your credit history in more specific detail. So you can visit greenpath.com/Genesis to learn more about GreenPath, or you can call 877-274-7580 to talk with a Caring Certified Financial Wellness expert. You can also contact Genesis to discuss their credit starter and builder loan options by going online to genesiscu.org or calling 800-521-8440. So we're going to stay on the line to answer any questions in the chat. So if you haven't sent them already, please do, and be sure to send them to all panelists so both Lori and I can see them. So Lori, it looks like there is one that I see in the chat for sure. The question is, so is it okay to not use your credit cards or line of credit at all? That will still help improve your credit score, correct?
Correct. I think the question comes in from Crystal. Great question. As I mentioned in my presentation, if you can pick one small bill and use that and pay it off monthly, that does help build your credit. What you don't want to experience is that the credit card is not used and potentially your creditor could close that down due to inactivity. So I always suggest that you pick one small bill, the Netflix or something, and then pay that off monthly, and that will help improve your credit score.
Perfect. It looks like we have another one. Is it better to have a credit card with the same bank you have, or is it fine to have a credit card that is outside of your banking institution? So I can answer that one. I mean, ultimately, you just want to make sure that wherever you're obtaining the credit from, that it is something that is going to get reported to the credit bureau. So as long as it's not like a prepaid card or one of those green dot cards that you can get somewhere like the local pharmacy, they would typically report to the credit bureau and you're going to be able to build your credit from there. Now, of course, if you have multiple financial institutions with multiple accounts, it might get more challenging to keep track of all of that. So you just want to make sure that you're staying on top of all of those things. Want to add anything to that, Lori?
Nope, I think that was a great explanation.
Okay, so I have another one here. Lori, it says, do I choose the amount of my secured credit card and how do I apply?
Great question. Typically on the shared secured credit cards, the limits are normally around $200 to $500, but potentially if you do have more money available and want to secure a higher limit, we can definitely handle that for you. At Genesis, we have people you can apply online, by phone at the 800 number that's listed, or at any of our branch locations if you're more comfortable in person speaking with a representative.
Thank you. It looks like Crystal popped another question in. What is the youngest somebody can start building credit? She said Google gives conflicting information.
Great question. To be legal and binding to sign a contract, you do have to be 18 years old. So that is what we have here at Genesis. There could be conflicting information out there on Google, but it's 18 at Genesis.
Okay, thank you. So I have another question. What do I do if I pull my credit report and see something that's incorrect? And that is a really good question. So again, you're going to want to make sure that you contact the creditor that's reporting the information to gain more information about what it is, where it came from, so that if necessary, you can file a dispute with the creditor. If the creditor does not do anything to investigate that or remove that, you will want to, of course, see if you can get any supporting documentation to support your case. But then you can also dispute it directly with the credit bureau that's reporting it. After that dispute is reviewed and an outcome is determined, if you still feel that the dispute wasn't satisfied appropriately, you can also file a complaint with the Consumer Financial Protection Bureau, and they can potentially look into that. So I think it's important to also keep in mind you're entitled to one free credit report from each of the 3 credit bureaus through annualcreditreport.com. So if you have never pulled your credit, I would recommend looking at all 3 of them just to make sure that it's all good. But once you've done that, once your year has cycled around again, I would pull one and stagger them so that you can keep tabs on what's going on. So pull the TransUnion 4 months later, Experian 4 months later, pull Equifax and start the cycle again. That way you'll have to be able to keep your eye on it without having to pay any cost to do that. So I have another one. Do I need to be a certain age to have a cosigner?
As far as from the cosigner standpoint, at Genesis, like I said, in order to be binding to sign a contract, you do have to be 18. If you have a cosigner or a parent that's willing to sign on your behalf, possibly we could look at an authorized signer on the credit card. When you turn 18, that is when you can legally sign.
Right. We also have one. This person has a Target credit card and the interest rate is really high. Is it best that I close it after I've paid it off? They're saying they have another credit card. I would say no, I wouldn't probably recommend closing it because if you've had that Target card for a while, you're creating long-term history from it. And then also if you close it, depending on how much your credit limits are on your other cards, your available credit utilization may drop. So really, I would suggest if you're going to use it and you know it's high interest, make sure you have the funds available to pay it in full when the bill comes, but keep it open. Occasionally charge something that you know you're going to buy, that you know you're going to be able to pay to keep that activity showing up periodically, but I wouldn't recommend closing it. Lori, do you see any other questions come through the chat?
There is one that just popped in, a particular time of the month where credit is always checked by the 3 agencies. I was told it is always checked at the end of the month, so to make sure everything is paid off and looks good by the end of the month. Yeah, that's a great question. Really at the end of the month, getting everything paid is recommended. Different banks, credit unions, financial institutions are staggered with their reporting to the credit agencies, just based on the amount of companies that report to the credit bureaus. So it's difficult to exactly say when every bank, credit union reports, but I would always just make sure that you pay your statement payment by the due date with your creditor to report positively to the credit bureau.
So to add on to that, there's another question is if we charge a small amount, then paid off the next day, will that help our credit in the same way as not using the account at all?
Well, it depends. If the creditor, if it's paid off the next day, it may not get reported to the credit bureau that you had a balance during that month. But paying positively and keeping the balance, low, if not to zero, obviously will continue to build your credit score also.
All right, I'm not seeing any other questions. Are you, Lori?
I do not see any additional new questions either, Dawn.
All right. Well, again, thank you everyone for joining us today. I did put in the chat if you were able to grab those links out, both to Genesis, is the phone number of the website, as well as to GreenPath if you want somebody to help you kind of review that credit report in greater detail specific to you. We can do that. But again, thank you so much for joining us. You know, we hopefully this will provide you with bits of information that you can take back and work towards your goals of continuing to build that credit. So again, thank you so much, everyone.
Thanks, everyone.